Hello and welcome to another edition of Targets in Focus, where we take a look at three currency pairs and how they are performing. Today I'm joined down the line by Anders Eklof, Chief FX Strategist at Swedbank. Mr. Eklof, thank you for joining me. Firstly, we're going to be taking a look at the euro SEK. The Swedish krona has sharply appreciated against the euro today after consumer prices in the country posted an annual contraction of 0.2%. Is the Swedish economy going to sustain the currency rate?
As we see it, number one, inflation might be below the Riksbank target in the short term, but the Riksbank is now looking away from the inflation rate and focus a little bit more on surprisingly strong macro numbers. And they also have in their eyes on the credit growth and the household debt level. So the Riksbank is very much on hold when it comes to the repo rate in going forward. That's our expectations, and this is despite the relatively strong krona. The krona has weakened a little bit recently, and that's due to perhaps we have some German numbers that were a little bit on the weak side, and we watch this correlation very much because Sweden is dependent on German economy and export growth from Germany, among else. But we keep our call for a fairly continued strong krona for the year, and we target a move back below 8.30 in 1 month, and we see it reaching below the last year lows, 8.20, in 3 months' time.
Norges Bank left the refinancing rate unchanged at 1.5% and suggested that low rates would now remain longer than previously estimated, and now predicts the first rate hike to be at some point during the first half of 2014. Because both the inflation and economic growth are navigating below desired levels, what do you see now for the euro Norwegian krone for the short, mid and long term?
Yeah, we are a little bit puzzled about the Norges Bank communication here. The reason, one of the main reasons why they got a very low inflation forecast and they pushed back the first interest rate hike was actually that they revised the Norwegian krona to the stronger side. So they actually now expect the Norwegian krona to be stronger, like a couple of percentage points. And if this not happens, then they might come back with going in the other direction. And then again, it's clear that Norges Bank has been noticing that inflation has come in too low for too long now, and they have become more dovish on average than we had expected. So we are like in the very short term, we expect Euro Norway to move very much sideways to perhaps even a little bit higher. But in the end, we think that Norwe's fundamentals versus the euro, not at least, will imply that the euro Norway is going to drop back again. And we target like 7.40 in 3 months.
Lastly, let's look at the euro dollar. Latest news is Cyprus has secured an international bailout to prevent the collapse of the financial system and the country's exit from the eurozone. What effect has this news had on the euro dollar, and what are your predictions?
We, as many other commentators, we stick to a quite bearish view on the euro and the euro dollar, and the main reason for that is actually the outlook for relative growth and relative outlook for monetary policy. As I mentioned before, we had a surprisingly weak German PMI, and this suggests that the ECB next week will have to become a little bit more dovish again. And the Cyprus story is obviously the Eurogroup has now ring-fenced the risk for depositors around elsewhere in Europe and so on. But the main story is focusing on Italy and what will happen there, and we will think that we need to have a risk premium in the euro according to the Italian politics and potentially very sluggish growth in the eurozone. So we target like 128 in 3 months, and if you look a little bit more in longer term, we target 120 in 1 year, and this is based on the Fed actually taking down their asset purchases in the second half of the year.
That was Anders Eklof with his predictions for three currency pairs. There will be another Targets in Focus on Wednesday. Goodbye.